If you've noticed certain bikes getting harder to insure, you're not imagining it. Insurance companies don't ban motorcycles. They don't have to. They just stop liking them. And once that happens, the market follows whether riders agree or not. In this video, we're talking about 5 motorcycles insurance companies are quietly killing through higher premiums and tighter policies. Stick with this one to the end, because once you understand how this process works, you'll start seeing it everywhere, long before it shows up in the headlines. Number 5. Yamaha YZF-R1. It was never meant to be subtle, and that has always been part of the problem. Long before insurance companies started tightening coverage language and quietly reshuffling risk tables, this motorcycle built a reputation that followed it into every garage it entered. Riders admired it for precision, control, and engineering honesty. Insurers studied it for something else entirely. They saw patterns, claims, and a history that never quite faded, even as the riders themselves grew older, calmer, and more experienced. This machine arrived carrying racetrack DNA that could not be disguised. Even when owned by a rider who spent decades on touring rigs, insurers rarely treated it like a weekend indulgence. They treated it like an unfinished accident report. The disconnect frustrates seasoned riders most. Experience used to matter. Mileage used to count for something. Today, actuarial models look backward, not sideways. They price the machine, not the man riding it. Part of the issue is cultural memory. This motorcycle lived through an era where speed clips, highway runs, and viral crashes defined its image. That image stuck. While many owners matured into careful, disciplined riders, insurance data did not mature with them. Claim frequency from earlier generations still weighs heavily. Even a clean record can feel invisible when the bike's history does the talking first. There is also the matter of repair economics. Fairings, electronics, and precision components do not come cheap. When something goes wrong, the bill escalates quickly. Insurers know this. They calculate average loss, not best-case ownership. A single incident often costs more than multiple claims on simpler machines. From a spreadsheet perspective, caution makes sense. From a rider's perspective, it feels like punishment for sins committed by someone else years ago. Another factor quietly shaping premiums is where these motorcycles spend their time. Track days, even occasional ones, change how insurers view exposure. Some riders never touch a circuit. Others go once a year. It rarely matters. The association alone nudges risk upward. Even policies that technically allow track use often price it in, whether you participate or not. The result is a premium that never quite matches how the bike is actually used. What makes this especially bitter for older riders is how predictable their ownership has become. Garage, kept, meticulous maintenance, conservative mileage, no stunts, no late-night highway pulls. Yet renewal notices still arrive with numbers that do not reflect that reality. It becomes clear the system is not designed to reward maturity. It is designed to smooth averages across decades of data. That is the soft ban in action. No letter arrives telling you not to ride. No law is passed. Instead, ownership slowly becomes harder to justify. Premiums rise, coverage narrows, deductibles creep upward. Over time, some riders quietly move on, not because they stopped loving the machine, but because they grew tired of explaining themselves to an algorithm. This motorcycle still delivers an experience few others can match. The connection between throttle, chassis, and road remains sharp. For riders who appreciate control over excess, it still feels honest. But honesty does not lower premiums. Insurance companies do not price feel or discipline. They price probability. For riders considering one, today, the lesson is not to avoid it outright. The lesson is to walk in clear-eyed. Understand that the insurance bill is part of ownership now, not an afterthought. Know that your riding history may not carry the weight it once did. Factor that into the decision before remembering how good it feels above 7,000 revolutions. Insurance companies treat this motorcycle as a statistical artifact rather than a personal machine. decades of claim history dominate modern underwriting, regardless of rider age or experience. Even conservative owners inherit risk assumptions built during earlier performance eras. Fairing damage, electronic complexity, and track association inflate projected losses. Actuarial systems cannot distinguish disciplined touring miles from aggressive riding patterns. As a result, premiums rise quietly, deductibles thicken, and coverage language narrows. This pressure does not announce itself loudly. It accumulates renewal after renewal, slowly reframing ownership from pleasure toward justification. Riders feel blamed without explanation, paying for ghosts of riders. 200 horsepower comes from a 998 cubic centimeter inline 4 engine, producing approximately 83 pound-feet of torque, slowed by dual front disc brakes with radial mounted calipers, controlled by fully adjustable KYB suspension, carrying a wet weight of approximately 448 pounds, a seat height of 33.7 inches, and a starting price of $17,399. What follows proves that reputation alone can be dangerous, but engineering extremes raise the stakes even higher. Number 4. Kawasaki Ninja H2. There are machines that scare riders, and then there are machines that scare insurance underwriters. This one lives in the second category. From the moment forced induction entered the conversation, risk calculations changed permanently. Experience, restraint, and mileage history stopped mattering the way they once did. Insurance companies do not admire engineering ambition. They price worst-case outcomes, not best-case behavior. That distinction explains why ownership of this motorcycle often begins with excitement and ends with paperwork. The presence of a supercharger alone pushes this machine into a different insurance bracket. Underwriters see complexity, heat, and stress multiplying consequences when something goes wrong. One claim can cost more than several conventional sport motorcycle incidents combined. That is why coverage limits appear lower, deductibles appear higher, and questions appear sooner. Many riders assume a clean record will override the machine's reputation. It rarely does. Actuarial models are built on severity, not sympathy. This motorcycle represents severity in pure form. Replacement parts are specialized, labor hours are extensive, and approved repair facilities are limited. Every one of those factors increases the projected payout on a single loss. For riders who maintain their machines meticulously, that logic feels disconnected from reality. The bike may spend most of its life cruising responsibly on open highways. Insurance companies cannot price that scenario individually. They price the potential, not the habit. Another overlooked factor is theft exposure. Exotic motorcycles attract attention whether owners want it or not. High visibility increases recovery risk and claim frequency. Even parked and locked, the machine carries statistical baggage. For older riders, this creates a strange imbalance. Skill improves, patience grows, and riding becomes more deliberate. Yet, the insurance experience moves in the opposite direction. Renewals arrive with longer forms and less flexibility. Some carriers quietly refuse coverage without explanation. None of this feels like a ban, but the effect is similar. Ownership becomes heavier before the engine ever turns. The machine still delivers an experience few others can replicate. Acceleration is immediate, stability is absolute, and control feels deliberate. For riders who value engineering extremes, that matters. Insurance, however, values predictability above all else. This motorcycle offers anything but predictability on paper. That is why premiums feel disconnected from personal reality. For anyone considering ownership, the smartest move is awareness. Budget for insurance as deliberately as maintenance. Understand that maturity may not earn the discount it once did. That reality defines modern ownership more than horsepower alone. Another quiet pressure comes from how insurers classify rider intent. Performance machines are assumed to invite performance behavior, even when owners never cross that line. Long gearing, stable chassis design, and modern electronics rarely soften that assumption. The machine's potential defines its category, not the way it is actually ridden. Older riders feel this disconnect sharply because their riding style has evolved. Years on heavy touring bikes teach restraint, planning, and smooth inputs. Those habits do not transfer on paper. Insurance software does not see smooth throttle hands or early braking. It sees peak output figures and acceleration curves. That gap explains why some longtime riders feel pushed toward machines they never originally wanted. Comfort and simplicity become insurance strategies as much as riding preferences. This motorcycle resists that shift by design. It asks the rider to engage, to focus, and to respect its capability. That relationship can be deeply satisfying. It can also be expensive to insure. For riders weighing legacy against excitement, the decision becomes philosophical. Do you accept higher costs for a machine that represents engineering progress? Or do you retreat toward categories insurers understand better? There is no wrong answer, only informed ones. Knowing how insurers think allows riders to choose deliberately, rather than react at renewal time. That awareness turns frustration into planning, and planning preserves the freedom that drew many riders to motorcycles in the first place. It is not surrender, but adaptation, learned the same way riding skill was learned, through experience and honest evaluation over time. Underwriters focus on severity, not frequency. And this motorcycle defines severity. Supercharged output increases repair exposure exponentially when incidents occur. Specialized parts, limited technicians, and extended labor hours elevate average claim values. Even a minor failure can cascade into major costs. Insurance systems respond by constraining coverage and hardening pricing. Experience behind the handlebars does little to offset mechanical complexity on paper. Over time, ownership friction replaces excitement. Riders encounter increased scrutiny during quoting and renewal. The machine remains controllable and refined, yet insurance frameworks assume worst-case scenarios. Pricing potential rather than behavior, discipline, or restraint from experienced owners. Approximately 228 horsepower without ram air, and up to 231 horsepower with ram air, comes from a supercharged 998 cubic centimeter inline-4 engine, producing approximately 104 pound-feet of torque, slowed by dual front Brembo disc brakes, controlled by Showa Balance free-fork front suspension and Showa BFRC rear suspension, carrying a wet weight of approximately 524 pounds, a seat height of 32.1 inches, and a starting price of $54,900. Legacy, not horsepower, is where insurance memory becomes truly unforgiving. If this breakdown is hitting close to home, tap like so more riders see it, subscribe for straight talk without corporate spin, and tell us which bike surprised you most. Real experiences in this community help everyone ride smarter today. Number 3. Suzuki Hayabusa. Legends do not fade quietly. They settle into the background and keep charging rent. This machine has carried a reputation for decades, shaped during a time when speed records, magazine covers, and late-night highway stories defined what performance meant. Even as ownership shifted toward older, disciplined riders, the story never fully changed. Insurance companies remember that story clearly, and they continue to price it as if the past never ended. For many experienced riders, the frustration shows up during renewal season. Clean records, long riding histories, and conservative mileage rarely move the needle. The bike itself carries the weight. Actuarial tables built across generations still associate this platform with high-speed incidents, extensive modifications, and theft exposure. Time has not diluted that data, even though the riders themselves have aged into calmer habits and more deliberate riding styles. Customization culture plays a quiet role here. Extended swing arms, engine modifications, and cosmetic experiments shaped claim severity years ago. Even when a current owner leaves everything stock, insurers still account for historical loss patterns. The result is a premium that feels disconnected from present-day ownership. Riders who treat the bike as a long-distance machine end up paying for choices made by someone else long ago. Replacement cost compounds the issue. Bodywork, electronics, and drivetrain components add up fast after a single incident. Insurance companies focus on average payout, not ideal outcomes. One loss can exceed several claims from simpler motorcycles. That math explains why premiums remain stubborn even as riders mature. From a spreadsheet view, caution makes sense. From the saddle, it feels impersonal. This disconnect is where the soft ban takes shape. No carrier announces an exclusion. Instead, costs creep upward, options narrow, and some riders quietly move on. Not because the ride stopped delivering, but because the numbers stopped making sense. Ownership becomes harder to justify on paper, even when it still feels right on the road. Despite that pressure, the machine itself remains deeply capable. Stability at speed, smooth power delivery, and long-distance comfort make it more versatile than its reputation suggests. Many owners log miles instead of headlines. Insurance pricing rarely reflects that reality. Riders who recognize the gap can plan around it, treating insurance as part of ownership rather than an afterthought. Historical data carries extraordinary weight inside insurance models, and this motorcycle has decades of it. Speed records, theft statistics, and modification trends still influence modern pricing. Even untouched examples inherit that history automatically. Insurers rarely separate current ownership behavior from legacy patterns embedded in databases. Repair costs reinforce caution, as bodywork and electronics inflate losses quickly. The result is persistent premium pressure that ignores rider maturity. Over time, this creates a soft barrier to entry. Ownership remains rewarding, yet insurance transforms the decision into a calculation rather than a passion-driven choice for seasoned riders seeking clarity, fairness, and balance. Approximately 190 horsepower at the crank comes from a 1,340 cubic centimeter inline-4 engine, producing approximately 110 pound-feet of torque, slowed by dual front Brembo disc brakes, controlled by KYB suspension with limited adjustability, carrying a wet weight of approximately 582 pounds, a seat height of 31.9 inches, and a starting price of $18,799. Risk does not always come from speed. Sometimes it comes from what a motorcycle is worth. Before we keep going, people keep asking what I ride with while dealing with this stuff. I've put it in the description so we can stay focused on why premiums keep climbing. Number 2, Harley-Davidson Road Glide Special. Some motorcycles earn trust by doing the same thing well for a very long time. This one did not chase trends or reinvention. It earned its place mile by mile, carrying riders across states, seasons, and decades without asking for much in return. That history is exactly why the current insurance pressure feels so wrong to many owners. A machine built for steady distance now finds itself treated like a rolling liability, not because of how it rides, but because of what it costs to replace. This motorcycle lives in a category insurers understand too well. Large fairings, integrated electronics, painted bodywork, and long parts lists all add up quickly after even minor damage. A slow speed tip over can trigger a claim that rivals a full loss on simpler machines. Insurance companies do not argue emotion or loyalty, they calculate exposure. High replacement value combined with theft desirability creates a profile that makes underwriters cautious by default. What frustrates longtime riders most is how conservative ownership no longer carries weight. Touring riders log miles differently. They ride during daylight, avoid congestion when possible, and maintain their machines with care. Those habits once earned lower premiums. Today, the bike itself dominates the calculation. The rider's history becomes secondary to what the machine represents on paper. That shift feels like a betrayal of the very values touring culture was built on. Theft risk adds another layer. This motorcycle is recognizable from a distance and valuable in parts. That makes it attractive long before the engine ever turns. Even secure storage and alarms do not erase that reality. Insurers know how often these machines disappear and how rarely they are recovered intact. That knowledge pushes rates upward, regardless of how responsibly the bike is used. There is also the issue of repair timelines. Modern touring, motorcycles rely on specific components that are not always quickly available. When a claim drags on, costs rise, rental coverage, storage fees, and labor hours accumulate. Insurance companies price that delay into every policy. Riders feel it as premium creep. Insurers see it as unavoidable math. None of this changes how the motorcycle performs on the road. It remains stable, at highway speeds, comfortable over long distances, and predictable in ways that encourage calm riding. That is the irony. The very qualities that make it ideal for mature riders do not protect it from being treated as high risk. Insurance models reward simplicity, not refinement. For riders considering ownership today, awareness is critical. The purchase price is only the beginning. Insurance should be treated as part of the total cost from day one. Asking hard questions before signing papers avoids surprises later. It is not about fear. It is about planning with clear eyes, the same way riders plan routes and fuel stops. This pressure does not mean the motorcycle has lost its purpose. It means the system around it changed. Riders who understand that can adapt without giving up what matters. Sometimes adaptation is choosing higher deductibles. Sometimes it is accepting higher premiums in exchange for comfort and familiarity. Either way, the decision should be deliberate, not reactive. Value concentration drives insurance behavior more than riding style. Large, touring motorcycles combine expensive components into single claims. Fairings, infotainment systems, painted panels, and drivetrain parts compound replacement costs. Theft exposure intensifies scrutiny, regardless of mileage patterns. Even careful long-distance use cannot offset projected payout size. Insurers respond by raising premiums incrementally and narrowing policy terms. Riders experience this as unjust escalation. Over time, insurance becomes part of ownership strategy. Planning deductibles, storage, and coverage limits grows. As important as route planning and maintenance discipline for experienced owners who prioritize comfort, stability, predictability, and long-term travel confidence always. Approximately 93 to 95 horsepower comes from a 1868 cubic centimeter Milwaukee 8114 V-twin engine, producing approximately 119 pound-feet of torque, slowed by dual front disc brakes with Brembo calipers, controlled by Showa suspension, carrying a wet weight of approximately 877 pounds, a seat height of approximately 26.6 inches, and a starting price of $22,999. Breaking tradition creates a different kind of problem insurance companies are still struggling to understand. To stay ahead of these quiet changes affecting real riders, subscribe now. This channel breaks down what insurers, dealers, and manufacturers will not explain clearly, so you can make informed decisions before renewal notices and market shifts force your hand. Number 1. Harley-Davidson Sportster S. It was supposed to bridge generations, but instead it exposed a fault line. This motorcycle arrived carrying a famous name and a completely different attitude, and that contrast unsettled more than traditional riders. Insurance companies noticed immediately, not because of nostalgia or branding, but because the numbers did not line up with the assumptions they had relied on for decades. A familiar badge no longer guaranteed predictable risk, and that uncertainty is where the quiet pressure began. For years, the Sportster name meant entry-level, manageable power, and straightforward ownership. Insurers built entire categories around that expectation. Then, this motorcycle rewrote the formula. Power delivery became immediate and aggressive. Geometry shifted toward performance. Rider demographics changed overnight. Younger owners arrived alongside longtime Harley riders looking for something sharper. Insurance models lagged behind reality, and when models lag, premiums rise. What confuses insurers most is how difficult this motorcycle is to classify. It is not a cruiser in the traditional sense. It is not a standard. It does not behave like earlier Sportsters at all. Risk categories depend on clarity. This machine offers none. High torque output, combined with short wheelbase behavior, increases claim severity when mistakes happen. Even experienced riders can be caught off guard by how quickly it responds. Insurers price that surprise into every policy. Repair economics add another layer. Modern electronics, unique bodywork, and specialized components drive up average claim cost. Even low-speed incidents can become expensive. Insurance companies do not separate intent from outcome. They look at average payouts and adjust accordingly. The result is coverage that feels tighter and premiums that feel disconnected from how the bike is actually ridden day to day. Older riders feel this disconnect sharply. Many approach this motorcycle with discipline learned over decades. Smooth throttle inputs, conservative corner entry, and mechanical sympathy define their riding style. Insurance underwriting does not measure any of that. It measures probability. When a motorcycle produces high torque instantly, probability changes on paper, even if behavior does not. There is also the issue of mixed rider data. This motorcycle attracts a wide range of owners, from seasoned Harley loyalists to riders stepping up from smaller machines. That mix increases variance in claims. Variance scares insurers more than raw volume. When outcomes become harder to predict, pricing becomes more defensive. That defensive posture shows up as higher premiums and narrower policy language. This is how the soft ban takes shape at the top of the list. No announcements, no restrictions, just friction. Ownership becomes slightly more complicated each year. Quotes require more. Questions. Renewal increases feel steeper. Some carriers quietly step back. None of it feels dramatic in isolation. Over time, it adds up. Despite all of this, the motorcycle delivers something real. The ride is engaging, the power is immediate, and the connection to the road feels alive. For riders who wanted a modern Harley that breaks tradition, it succeeds. The issue is not the machine. It is the mismatch between what it is and how insurance companies learned to price its name. For anyone considering ownership, the lesson is clarity. This is not an old Sportster with a new look. It demands respect and planning, including insurance planning. Treating coverage as part of the purchase decision avoids frustration later. Understanding how insurers think restores agency. Classification uncertainty is expensive inside insurance systems. This motorcycle defies traditional categories, confusing risk models built on older assumptions. High torque delivery and aggressive response elevate. Severity potential. Mixed rider demographics further increase variability. Insurers price uncertainty defensively, tightening language and elevating premiums. Rider skill and restraint remain invisible to algorithms. Over successive renewals, friction accumulates quietly. Ownership feels questioned rather than welcomed. Understanding this dynamic restores control. Treating insurance evaluation as part of purchase planning prevents surprise and preserves enjoyment for riders who value modern performance within a historic badge while respecting heritage, identity, and long-earned riding confidence. 121 horsepower comes from a 1252 cubic centimeter revolution Max 1250 TV twin engine, producing approximately 94 pound-feet of torque. Slowed by dual front Brembo disc brakes, controlled by fully adjustable Showa suspension, carrying a wet weight of approximately 502 pounds, a seat height of approximately 2080, 0.9 inches, and a starting price of $15,999. That uncertainty is where this story ends, and where the quiet pressure on riders becomes impossible to ignore. Insurance pressure doesn't show up all at once. It creeps in renewal by renewal until ownership stops making sense. That's why sharing real rider experience matters. Let us know in the comments if you've been hit with rising premiums or coverage changes. Hit like if this rang true, subscribe for straight talk, and keep this community informed.